Hello, hello, and welcome to April 28th. Alpha Capri at 35%. It didn't go anywhere today. It was 35 yesterday and held today at 35 again. Right there, that's 35% line. So that's our Capri. And we're looking for the third ratio here at 57.95, and we got a close of 55.28. So we are still we're still at 2.5, 3 days out of the ATR of 226. Okay, so let's go on to T. AT&T at 34. And bring something to your attention. Let me zoom in a little bit closer because we are looking at an Elvis shift coming up very shortly. May 1st is fast approaching, and that is the time. If we do any kind of Elvis shift, we do it on the 1st of the month. So here we are. And you are noticing there is a new indicator on the chart. I'm going to get that. I'm going to use that for the example of getting into this discussion. So, there's our third ratio. We did not get the close above the 34.44, so our stop is still way down here at this dipper low down in this zone. And we are at in AT&T is in the 60 days. Remember, we are less than 60 days expiration. We take the dip low or dip high according to the direction of the trade. This is a call, so we'll be doing the. Oh, we are going to go a lower low. What am I talking about? We don't. There's no third ratio anymore. I caught my own self. Yeah. So let's go ahead and do that. The low was 30.63, so it makes it 30.60. I do not give a lot of buffer to it because of the fact is that this was a bad fill to begin with. So 30.60, I believe, was the number. Let's see, the 28th. The low is 30.90, so it'll be 30.80. 30.80 is our low, and that's where we're going to be at. We're going to be at 30. Oh, no, the low is here. The low is 30.60. I was right the first time. So it's 30.60 because it's a dipper low. We're going to move the time. Today is the 28th, and we're looking at getting out of this trade in the week later in May. And that's what we do it. And we also switch this to green. We earn the green jacket like they do in golf at the Augusta. Okay, so there it is, the new low, dipper low for AT&T to hold on to some kind of return and get back our trading capital. So we are in the rule number 5. You have to be very aware of that. Oh, let's go ahead and change this now. This is a dipper today's date. So you see all these notes have to be brought up to date because why? You can get very lost very quickly, and you can get lost very quickly in setting up your trade and then not do your stop and then realize that you just missed the opportunity of getting out of Dodge. So now we turn on the buy bubble and we'll come here and it's cancel and replace. Remember, the order ticket is the most challenging thing you need to master when getting into trading because, as my legal instructor says, the most important thing to any contract is the exit clause. You have to know your exit clause, and that's what is here. So there is our exit clause because of we are in the 60-day rule, and we are now here at this dipper low. So you do the doji, not very encouraging of where it might go and maybe come down. Now, let's get into the DMI. This is the DMI. The problem I was having here with the stochastics of the new stochastic twist for April, we were using the Stochastic Weekly as for a trend. The problem was that it was not giving us one a lot of trades, and two, there was a conflict between the evaluators. The evaluator said that this is an uptrend, and the weekly stochastic says it was downtrend, and the evaluators here, which one of them is TradeView. TradingView is one of the is one of the sites that I use. Right here, Trade View is open. It's free. Come in here. Let's go ahead and put in T, and there's AT&T. And then what I like, because I'm a technical trader, I like to come down here and hit technicals. And then I want to see where it's going to be projected in 1 month. And it's, look, sell, sell. So we, by getting ready to get ready to exit, and because remember, this was a bad fill. It was oh no, this was a good fill. I'm sorry, it was T minus. I apologize. T minus was the one with the bad fill. Sorry about that, guys. Excitement. All right. So, but we still, it was a good fill, but we're not getting any action to moving. But we got 155 to our good at this close, and where our stop is here. So this would still end up as a profit exit trade and return our buying power. Remember, when you win, you get back your original initial bet plus the profit. Okay, so that takes care of T, and now let's get into the DMI, directional momentum index or indicator index. What it means is that the blue line is that this is an indication of getting into that the calls are ahead of the puts. That's all it is. The long is ahead of the shorts. The green line that you see down below here is the ADX, Accumulation Distribution Index. And what that's saying is who has at the end of the day, who is the most strongest? Are the buyers stronger or the sellers are stronger? The ADX is a pressure gauge. It doesn't not indicate direction, but the DIM does indicate in direction. So what that says is that if the ADX is here and it's hobbling along, this is going to be hobbling along because there's not a lot of excuse me, not a lot of pressure here. But the calls have the upper hand. That's what that's indicating there. So the indicator that we're going to be switching out is the Stochastic Weekly. We're going to take that out, and we're going to put this in place of it to see if we can get into some more opportune enhanced trades. With that said, we have ATVI at puts with a 24%, RTX at 24% for a call, CVS at 12 at the call, and IAW 2% for a call. And the reason I'm going into that is because I wanted to go to something else here. This is our Nemesis right there. Not that guy. This right here. This PRWAX is 17.75 on a 10-year average. That is a benchmark. It's similar to this benchmark. It's similar to this guy. We are out to beat the SPY. We are now at 20%. You can see over here on our title chart, we hit 19.1. SPY is at 19. The bottom line is that if we as traders are not beating the professionals, mutual funds, then we just might as well let them do the work. That's simple. Yeah, it's that simple. And here's the point. There is pension funds have what they call rate of assumption, the rate that they would like to get per year. So I particularly know one fund, which is 7.75 is their rate of assumption. That was in 2019 at the last time that I was a member of that fund. But consider that if this goes belly up, they're going to lose. They're getting the hole. But if they had the 17.5, if they had 17.95 in their portfolio, and the expense is only point. Look at that. The point it's only 0.78 on the It's only 0.78 for expenses. It's 17.7 as the return. That sure beats their 7.75 by 9.4%. And that fund will not be in any trouble today. It is in trouble today. So with that said, we'll conclude today's report for Capri at 35%. The account is at 19.1, a little bit of a dip, but we're ahead of the SPY and we're slightly ahead of the portfolio manager of the week of 17.95. And with that, I thank you very much for stop by checking it out.